Today we're going to talk about the IRS and cryptocurrency, Bitcoin tax law or crypto tax laws. So it's that time of year in the U.S. A lot of people are filing taxes, and specifically there's been some letters that have been going out to to cryptocurrency owners essentially from the IRS. And I want to kind of break some of this down because I recently got some guidance on this myself, and I thought, you know what, there's a lot of people who watch my content that may not even be aware of this, and it's important to be aware of this. Now, let me just say this first and foremost. I absolutely am not a fan of the IRS. I am not a fan of paying taxes, not because I have a problem with paying taxes. It's really the politics behind paying taxes. I mean, I think that our government spends too much. They abuse the taxes they get. So I'm not here talking about this stuff because I think that, you should do your civic duty and pay your taxes. If you think paying your taxes and not holding the Congress accountable to spending the money, and if you think that's your civic duty, then you don't need to be on my channel. I mean, I think taxation, income taxation, is absolute theft. However, it is what it is. Most people don't realize that our Constitution, it is actually against the law, but try to avoid paying your taxes and try to use the Constitution as your argument, and you will end up dying in jail just like Peter Schiff's father did. If you don't know who Peter Schiff is, you should look him up. But his father had the chance to basically take a bit of a plea bargain and not go to jail. And on sheer principle, he went to jail because he said taxation was illegal, and he had a full constitutional argument on it. It's neither here nor there. That's how I feel about taxes. But with that being said, I understand that I have no choice. I understand that I have to pay my taxes, and I pay my taxes, and I encourage you to pay your taxes. But cryptocurrency is one of those areas that a lot of people get in almost as a hobby. And in the beginning, a few years ago, really and truly, the government didn't know how to, they didn't know how to react to cryptocurrency. They didn't know really how to enforce it, what to do with it. But all that is changing a great deal. I mean, the federal government is becoming very aggressive with coming after Bitcoin. In fact, be sure to subscribe to my channel. I've got an entire video coming up talking about kind of President Trump stance on Bitcoin, if you will, and it's going to explain some of what I'm going to discuss in this video. But the bottom line is this: the IRS is getting very, very aggressive about coming after owners of cryptocurrency. Particularly, they're partnering up with Coinbase. If you haven't seen my video about Coinbase and Coinbase working with IRS and DEA, then I'll link that above. I'll put a link down in the description as well. Look at the bottom of the description for the Coinbase working with IRS and DEA. It's really sad. Coinbase is actually seeking contracts to sell customer data to the IRS and to the DEA. Meaning, understand what I'm saying. It's one thing to be a cryptocurrency-based company and to comply with regulations so you can stay legal and legit. It's another thing to say, not only am I going to comply, but I want to actively court the U.S. government so that they can pay me money and I can sell them my users' data under the suspicion that, somebody's doing something illegal. I mean, that's crazy. It would be like Gmail saying, you know what, we want to sell the U.S. government data, so we would like a contract so we can sell you data on the people that we're monitoring. I mean, that's just going above and beyond, and I'm not certain how many companies have ever done that, but it's unprecedented for a cryptocurrency company to do that. I no longer use Coinbase, and I don't recommend to use Coinbase either. That's getting off topic, but I will tell you that's why I use crypto.com. I'll put a link for crypto.com down in the description. Shameless plug. Get yourself $50 for signing up for the crypto debit card, the Ruby card. All right, so let's talk about the IRS. Let's talk about cryptocurrency, what's going on here, because I don't think a lot of people are aware of this, and I don't think many people think about it, because I think a lot of people get started in crypto. It's almost kind of like a hobby for some people. They just earn a little bit, and before long they earn a little bit more, and then before long they're investing and whatnot. So it's important that you understand. First and foremost, what you want to understand, by the way, you can search this document, IRS Notice 2014-21, and you can read through this whole thing yourself. I'm going to cover part of it. The big part is commonly asked questions or frequently asked questions. How is virtual currency treated for federal tax purposes? For federal tax purposes, virtual currency is treated as property. This is important. It means it's not considered money. Most people are not aware of that. The IRS does not consider cryptocurrency money. This creates all sort of problems when it comes to your taxes. General tax principles applicable to party transactions apply to transactions using virtual currency. Now, some people will try to say, oh, it's an asset, so therefore I can do like a 1031 exchange. Yes, but in order to do a 1031 exchange, you have to follow certain rules. You just can't exchange one cryptocurrency for another cryptocurrency and think that you just did a 1031 exchange, because you didn't. You created a taxable event, and those taxes can get complicated. Now, at the end of this video, I'm going to give you at least one resource you can use to help you with your cryptocurrency taxes. I will tell you up front, the number one problem that I personally ran into, and I have, I do everything on the up and up, but there's a lot of people who claim to be familiar professionals who claim to have some sort of expertise in cryptocurrency, and they don't know anything. They're just marketing and advertising themselves, trying to get your business. But here's what a lot of people don't know about accountants and lawyers. They are not legally held responsible for their advice. So even when you file a tax return, one of the documents that you sign in the U.S., we're talking primarily in the U.S., basically says that you gave them all the information correctly. And so if there's a mistake, they're going to say that it's based off the information that you gave them or the way that you gave them the information. It's basically a way. I had an accountant who explained it to me years ago, and I was like, get out of here. It's crazy. So just know that even if you get legal advice from a lawyer, if you get sued or you go to jail, you can never give yourself a defense that my attorney advised X, Y, and Z. That is not a defense. So just make certain that and I'll give you one recommendation that I've used and I like a lot when it comes to cryptocurrency, just the legal aspect and the accounting aspect. So let's just get back to what we're talking about. Is virtual currency treated as currency for purpose of determining whether a transaction results in a foreign currency gain or loss under U.S.? No, it's not. It's not treated as money. That's the bottom line. Must the taxpayer who receives virtual currency, if you don't know, is cryptocurrency, must the taxpayer who receives virtual currency as payment for goods or services include in computing gross income the fair market value of the virtual currency? Yes. A taxpayer who receives virtual currency as payment for goods and services must, in computing gross income, include the fair market value of the virtual currency, measuring in U.S. dollars, as of the date that the virtual currency was received. So here's the challenge with this. A lot of people don't realize, like, for example, if someone pays you in $100 worth of Bitcoin, a lot of times, let me back up a little bit. A lot of times when people take payment, they use payment gateways. I think BitPay's one, Coinbase has one, Crypto.com even has one. They use payment gateways that basically you pay with crypto, but they actually get money in their dollars in their account. And there's a reason for this. And a lot of people who are new to cryptocurrency but don't understand, or people that are hardcore on cryptocurrency, but they've never had a business, they've never dealt with merchant accounts, and they've never researched these laws, they don't understand. They almost see it as some sort of like you're a trader or something because you accepted payment in crypto, but your payment gateway immediately converts it to dollars. Well, the reason they do that is to help with the accounting and the bookkeeping. So let me show you an example real quick. I get this all the time. So down in the description, you'll see my Crypto Passive Profits newsletter. So when you subscribe to that newsletter, the very next thing that you'll see after that is a video that talks about our Crypto Passive Profits course. It's all about building crypto passive income, crypto passive streams by literally starting and growing a real crypto passive business or Bitcoin passive business. So a lot of times people say, how come you don't take cryptocurrency for your course? Well, one of the reasons I don't take cryptocurrency for the course is because the same reason that most of your merchant gateways, they will allow you to accept cryptocurrency, but they immediately convert it back to dollars. It becomes a headache for tax purposes. So if you were to, if someone was to pay you $100 for, anything, let's say you sold something on, you sold something on eBay or Craigslist or the Facebook Marketplace, and you decided you were going to sell it for $100, and someone says, hey, I'll give you $100 in cryptocurrency. So they give you $100 in Bitcoin. You accept it. But you wait a month to sell that Bitcoin, and by then there's a 50% increase. The price goes up 50%. So now it's worth $150. When you file taxes, you have to show that you sold something for $100. And if it's a one-off sale, it doesn't matter. If it's over $600, you're supposed to file taxes on it. I recommend you do that. But let's just say that you sell it for $100. That's one type of tax you've got to make sure that you file. The price goes up to 150. You end up selling it. Then that's another type of tax. It's basically a capital gain tax on the $50. So you don't get to just sell the cryptocurrency for 150 and think that, oh, I just pay tax on that. No, you got to file that differently, or at least you need an account to file it differently. The other thing that you can't do is you can't say, oh, I don't have to sell it yet because I don't have to pay taxes on it because I didn't sell it yet. It doesn't necessarily work that way. You took a transaction and you've got a basis price that you have to pay taxes on based off that basis or basis point or basis price. So just be aware of that. It also creates issues with trading cryptocurrency. That's a whole nother ballgame. People think, oh, I can trade, Bitcoin for Ethereum, or Ethereum for, Cardano, or Cardano for XRP, or whatever. You can't just do that. You can do that, but every single trade is a transaction, and it's a taxable event that has to be filed based on the US dollar amounts at the time. People do not realize this. And by the way, what I'm talking about here, I'm going to get to something here that the federal government has already started enforcing this, and I'm going to talk about that here in a minute. So it's not like someone can get away with it. I mean, what they're doing right now is, I don't know, it's sneaky, sneaky, sneaky. All right, here we go. What is the basis of virtual currency received as payment for goods or services? The basis of virtual currency that a taxpayer receives as payment for goods or services is the fair market value of the cryptocurrency in US dollars as of the date of receipt. The problem with this, how is the fair market value of cryptocurrency determined? For US tax purposes, transactions using virtual currency must be reported in US dollars. Therefore, taxpayers will be required to determine the fair market value of virtual currency in US dollars as of the date of payment or receipt. If a virtual currency is listed on an exchange and the exchange rate is established by market supply and demand, the fair market value of the virtual currency is determined by converting the virtual currency into US dollars at the exchange rate in a reasonable manner. Okay. So here's the challenge with this. Not all currencies are on an exchange. Not all currencies are priced in US dollars. That's kind of the interesting scenario. And if a lot of your currencies, you can figure it out. You can kind of figure out, maybe they are an ERC20 token. So what's the price of Ethereum in US dollars at the time? And then what is that currency priced at in Ethereum? The challenge is they put all the burden of proof on you as a trader. Now, all of this is not perfect. All of it is not perfect. But you definitely need to make certain and show some documentation that you're doing your best to comply with the law, because if you end up becoming as successful with cryptocurrency as an investor as you want to be, and you get to the point that you've got 100,000, God forbid a couple 100,000, even $1 million, the bigger target you become, and the more likely you could be made an example of. So you got to be careful. You need good tax advice. Does the taxpayer have a gain or loss upon an exchange of a virtual currency for other property? Yes. If the fair market value of property received in an exchange for a virtual cryptocurrency exceeds the taxpayer to adjust his basis of the virtual currency, the taxpayer has received a capital gain. This is a taxable gain, sorry. That's what I'm referring to earlier. So if you sell something for $1,000 in cryptocurrency, then it goes up to $1,250, then the sale at $1,000 is taxable as gross income, but you also have a capital gain tax of $250 that you're going to have to account for. What type of gain or loss does the taxpayer realize on the sale or exchange of cryptocurrency? The character of the gain or loss generally depends on whether the virtual cryptocurrency is a capital asset in the hands of the taxpayer. A taxpayer generally realizes capital gain or loss on the sale of exchange of a virtual currency that is a capital asset in the hands of a taxpayer. For example, stocks, bonds, and other investment property are generally capital assets. A taxpayer generally receives ordinary gain or loss on the sale or exchange of a virtual currency that is not a capital asset in the hands of the taxpayers. Inventory and or other property held mainly for sale to customers in a trade or business are examples of property that is not a capital asset. That's primarily for exchanges. That's not for us. Then it gets into mining. Mining is a whole nother ball game altogether. Mining is not perfect at all. Basically, every time you mine, and you got to be able to track every time you've got a block reward and what was the price of the block reward at the time, and then you have gains or losses, taxable gains and or losses based on that reward. Now, the challenge is you've got to be able to, when a taxpayer successfully mines virtual currency, okay, hang on, is an individual who mines virtual currency as a trade or business subject to self-employment tax. This is a whole nother ball game. one of the reasons that I have my course, in our course, we use a CryptoTab browser. I've not got financial advice to what I'm about to say. You need to do your own get your own financial advice, your own tax advice. I'm not a tax professional. These are just things that I'm aware of that I'm sharing with you. But one of the issues with my Crypto Passive Profits newsletter and subsequently the Crypto Passive Profits course, inside of that course, we talk about earning cryptocurrency. Now, some of you have seen my three-phase plan. My three-phase plan, which I'm going to redo here soon. If you want more info on that, be sure to subscribe to my channel. Hit the bell notification. But the three-phase plan, the whole idea behind the three-phase plan is that we end up creating a business model based in fiat on training and marketing for the course, and then we earn on the back end is in cryptocurrency. My hope is, and I don't know if this is going to work out, I'll need to get some advice to this effect, and you need to get your own advice. I'll never give financial or tax advice inside the course, but my hope is that by creating fiat income, another reason I don't accept Bitcoin for the course, I'll be able to position the course as the primary income source, and on the back end be able to provide mining as more of a hobby. That is my hope, because there's a difference is if you're mining it as a hobby or as a side income, or is it your primary main sort of income. Just like some of you don't know this, it's the same thing for playing poker. You get certain taxes on your poker and things you can write off on your poker playing is different if you're considered a professional poker player, which means the majority of your income for the year came from playing poker, or if you're just a hobbyist playing. So that it's treated a little bit differently when it comes to mining. So it's interesting if you're mining Bitcoin on a large scale, meaning it's a primary income or even close to a primary income or even a livable income. If you're making $30,000, $40,000, $50,000 a year mining Bitcoin, which I don't know that there's many people at home doing that right now, but if you are, then you definitely want to consult a tax accountant related to crypto, someone who specializes in crypto. Does virtual currency received by an independent contractor for performing services constitute self-employment income? Yes. See, there's a whole problem. You're going to have to file self-employment taxes on your cryptocurrency earnings. I think self-employment taxes is one of the most unfair taxes on the planet. That's another video for another day. I have paid my fair share of those things. Does virtual currency paid by an employer as remuneration for services constitute wages for employment tax purposes? Yes, yes, yes. So understand there's two things here. It counts as wages, but they're not treating it as money. It's seen as an asset. So that is treated a little bit like real estate in some ways. So just keep that in mind. Is payment made using virtual currency subject to information reporting? This is extremely, extremely important. A payment made using virtual currency is subject to information reporting to the same extent as any other payment made in property. For example, a person who in the course of a trade or business makes a payment of fixed and terminal income using virtual currency with a value of $600 or more to the U.S. non-exempt recipient in a taxable year is required to report the payment to the IRS and to the payee. Examples of payments of fixed and determinable income include rents, salaries, wages, premiums, annuities, and compensation. And this is part of why exchanges have KYC AML, because they've got to be able to report if you've gotten it's a regulation, they have to do it anyway. But by law, to stay compliant, they would need identifying information on you anyway, because when you earn over $600 in profit, they have to report that. Most people don't realize that if you sell a car and you sell that car for more than $600, say you sell a used car for $2,000, by law, you're supposed to file a W-2 or whatever. A W-2 may be you basically have to declare that you made that, and you have to be able to declare who you made that to. And part of that is because if you ever get audited or that person gets audited, it's about being able to trace down, did you report them that you made the sale? Did you report the gain of the sale? And or did they file, for example, that they purchased the product or whatever, or the person who profited has to file, the person who made the sale has to file. It has to go on both sides. Most people aren't even aware of that, but it's how they catch some people in tax evasion cases. All right, let's keep going. All right, let's keep going. Are payments made using virtual currencies subject to backup withholdings? Pretty much. Are the IRS information reporting requirements for a person who settles payments made in virtual currency on behalf of the merchants that accept virtual currency from their customers? Yes. This right here is why all your merchant accounts convert to US dollars. Will taxpayers be subject? This is interesting. Will taxpayers be subject to penalties for having treated a virtual currency transaction in a manner that is inconsistent with this notice prior to March 25th of 2014? 2014. Taxpayers may be subject to penalties for failure to comply with tax laws. For example, underpayments attributable to virtual currency transactions may be subject to penalties such as accuracy-related penalties under Section 6662. In addition, failure to timely or correctly report virtual currency transactions when required to do so may be subject to information reporting penalties under Section 621 and 6721 and 6722. However, penalty relief may be available to taxpayers and persons required to file an information return who are unable to establish that the underpayment or failure payment to properly file information returns is due to reasonable cause. Notice how this is a big gray zone. It's not any fun. Why can't they just say yes, or why can't they just say no? Preferably no. So this is a bit of a mess. This is the government trying to find their way around IRS and cryptocurrency tax laws and Bitcoin tax laws and whatnot. Here's the challenge. Here's what you need to understand. Most people think they can get away with this. But right now, the IRS has been sending out letters. The 6173, there's 6173, 6174, 6174A. They're all very similar, except the last little bit tends to be a little bit more threatening. But the bottom line is they're basically sending out these letters, and they're stating, hey, we think that you might owe us some cryptocurrency taxes. We think that you might owe us some, we think you might have some cryptocurrency that you haven't basically declared on your taxes. Should you have to declare that? The answer, of course, is yes. But the last thing you want to do is lie and say, oh, no, that's not true. Oh, no, I don't have that. And you think you're somehow hiding something. If you get a letter and the federal government, the IRS, is saying, we think that you might have some cryptocurrency that you haven't declared, it's important that you understand that that means they know you have it, and that you got to be careful from lying to the federal government. I mean, that is a criminal offense. A criminal offense, yes. That's a federal crime. You've got to be careful. And you don't want to be caught in that situation. It's not a good place to be. So if you get one of those letters, I recommend that you reach out to some sort of tax professional. I overlooked a question in here that I want to make sure I talked about, and I'm not seeing it right now. But basically, it's about foreign accounts. If you have an account, say at KuCoin or whatever, and they don't do KYC AML, which is optional at KuCoin, you are still responsible for that. A lot of times people think if I have cryptocurrency in a foreign account that's not mine, then or if I'm holding it offshore, then it's not going to be subject to U.S. Taxes. In some cases, it might not be subject to U.S. taxes. I'm not telling you. I mean, there's a lot of stipulations that determine whether it's subject or not. But the U.S. is one of the only countries in the world. It is one of the only countries in the world where you are required by law, if you are a U.S. citizen and you earn an income outside of the country, even in a different currency, and it never comes inside the country, by law, by U.S. tax law, you are required to file it on your taxes. You're not necessarily, you might not have to pay taxes on it, but by law you have to report it. And that is kind of crazy. A lot of people aren't aware of that. I mean, if you move overseas, unless you denounce your citizenship and become an expatriate, if you move overseas and live there and work there, even in the U.S., you're required to send Uncle Sam a tax return. The tax return may have all zeros, or it may have everything you've earned overseas, and you don't owe taxes in the U.S. at all. You're not even living here. You are still, so the fact that you still have to do that as a U.S. citizen means you still have to do it with your cryptocurrency holdings. You just need to be aware of that. I mean, they are going to get aggressive. The IRS has been mandated basically to collect taxes. Our federal government is hurting for tax revenue, and they are getting very serious about collecting this tax revenue. And Bitcoin is one area where they believe there are billions of dollars in uncollected taxes. So if you get a letter that says, hey, here's what I recommend you do. If you get a letter that's saying, hey, you may have some tax, we think you might have some cryptocurrency. Chances are you had a Coinbase account. Chances are Coinbase reported you. So you just need to know that you need to get with a good a good cryptocurrency accountant. One that I would recommend, I've used these guys before, is Anderson Business Advisors. You can find them on YouTube. I have used them before. I will tell you up front, I don't care for their bookkeeping services, and I don't care for their actual tax preparation, but I do know that they actively research new laws all the time. The guys who run Anderson Business Associates, if you need an LLC created, if you need a simple trust created, if I would go with these guys. They do a lot of good work, a lot of good services, and they just do good work when it comes to legal advising in particular. When it comes to cryptocurrency, I would probably I have them doing some stuff for me. I'll put it that way. I would trust them to do that. But with that being said, keep in mind, you're ultimately the one responsible. So you kind of need to be aware, at least have a general idea of what's expected. Now, I want to say one more thing about Coinbase, about exchanges, etc. Be very mindful. One of the most common topics in cryptocurrency is trading. I just want to reiterate, you've got to be very careful with trading. Every single trade is a taxable event. So just be mindful when it comes to trading. Every single trade creates a taxable reporting event. And that's very different than saying, let me see, I'm up $1,000 trading this month, I'll pay tax on the $1,000. No, it doesn't necessarily work that way. So you just need to be aware of that. I want to say something real quick about Crypto.com. Crypto.com, obviously, if you see my channel, I need to talk about it. There's so many things I want to say about Crypto.com, but I don't want my channel to be all about Crypto.com. I love this company, love this platform. It's the easiest way to spend cryptocurrency on the planet. I've done videos talking about the Crypto.com cards. I've got a full tutorial on Crypto.com. I'll put that above and I'll put it down in the description. You can watch that video. Here's what I want to say about Crypto.com. One of the complaints about Crypto.com is their card. And with their card, and I will admit, I find the website to be a little bit misleading about this. Let me see. But I understood it immediately. So their cards are unbelievable. Like, again, you can go watch my whole video and we'll talk and you can see. But a lot of people understand this card to be a Crypto.com debit card. So I've got Bitcoin in my account. I can swipe my card. It's a Visa card, so I can pay with dollars. Yes, but it's not quite that easy. It's very easy inside the account, but what actually ends up happening is your Bitcoin gets sold in the account on the internal exchange for dollars. And then you load the dollars onto your card. And then you use the card. So with that being said, why is that a good thing? Well, because you can load money on your card. You get cash back on your card when you have 50 MCO tokens staked. You have cash, which right now, by the way, 50 MCO tokens are quite low. If you've been thinking about getting the card, now's the time to get it. But the thing with the card is you can load, with that card, you have a routing number and an account number. It's actually a bank account attached to it's literally a debit card for a bank account. So you can have money direct deposited to your card. You can pay your bills with your debit card. And then you're going to get cash back, up to 5% cash back in MCO tokens on your card that you can sell or whatever. However, the reason that's good is because if this card if it was only crypto, if it was possible, which I know this is their goal, but this can become an issue using the card. If it was possible that you could somehow just send money to the card and it was automatically turned into crypto and it stayed in crypto until you used the card and somehow automatically turned it back to dollars. The problem with that is every single transaction becomes taxable because the cryptocurrency is not considered money. If you put fiat dollars on your card, it just stays as fiat dollars unless you choose to buy cryptocurrency inside the app, which you can do. I have a full tutorial talking about that. But if you choose to hold it in dollars, then when you hold it in dollars, you're not creating a taxable event. That is good. That's a good thing. So just be mindful of that. Now, one good thing I will tell you, Crypto.com, when you get their statement at the end of the year for tax-related purposes, it's very detailed. You give it to someone like Anderson, and they're going to know what to do with it. Anderson Business Advisors. And by the way, anyone in the U.S. can use Anderson Business Advisors. You don't have to be in their state. I think they're in Nevada. You don't have to be in their state. Anybody can use them. I don't live in Nevada, and I use them. So just an FYI about that. I just want to mention that about the card because a lot of people complain that, oh, it's not a real crypto card. It has, it's connected to a fiat account. You kind of want it to be. It creates less tax issues that way. But you're still able to convert in and out of crypto at will. And someone else told me, and I'm going to make a whole video about this, but someone said, what about the CRO token versus the MCO token? You can earn more with the credit, and all that stuff. I'm going to get into that in another video, so I'll save that for another video. I want to make sure we talked about the IRS, cryptocurrency, understand some basics, and I just wanted this to be some basics for you to think about. I don't want you to be nervous about it. Don't be scared about it. I do want you to pay your taxes. I want you to be compliant. I don't want you to be ignorant. I don't want you to get in trouble. I love the fact that you find cryptocurrency important and worthwhile, just like I do, and we're on this journey learning together. But I just wanted to share this with you in case you didn't know. You just need to be aware of the fact that you've got to pay your taxes on it. It doesn't count as just monopoly money. It is a real asset that has some tax consequences, and you want to be aware of that. Thank you so much for watching. Please don't ask me any tax questions in the description. I will not answer them. I am not a tax or legal expert. You can take that up. You can come over here to Anderson. You can take that up with these guys. They are excellent at what they do. In fact, I think you can come here. Oh, there's a website right there. You can go to the website. Oh, is that a phone number? There's a phone number. Speak with one of their expert advisors right there if you have any questions. Thank you so much for watching. Hit that subscribe button. Hit that bell notification icon. Thank you for watching. And by the way, if you don't have your MCO Visa card, now's the time to get it. I think today it was below $5 per MCO token, which has been almost up to $6, and it's been above $5 for a long time. So I think we're in a lull. I personally picked up some tokens, and I encourage you to as well. Get that Ruby debit card because it's awesome, or better. I mean, my goal is the black card. The black card. All right, thank you so much for watching. Hit that subscribe button. Hit that bell notification icon. Remember, crypto equals freedom. Crypto wealth. I'm out.